we have already seen one remittance product called NEFT. Now we are going to see another remittance product of banks, which is coming under the agency function of banks, and this product is called RTGS, Real Time Gross Settlement System. Now if you look at NEFT and RTGS, both of them are more or less similar. Under NEFT, you transfer money from one account of one branch of one bank into another account of another branch of another bank. And RTGS also is doing the same function. More or less both of them are doing the same function. That being so, why are we having two different products? This we should understand. Then only we will be able to appreciate the difference between RTGS and NEFT. Now RTGS, as the name itself suggests, is real time. The money under RTGS is transferred from one bank account to another bank account of another branch, another bank account of another branch of another bank in about few seconds. The moment here they press the button, in another 2 seconds the money is received at the destination. On the other hand, in NEFT it takes about nearly 1.5 to 2 hours because it is a batch process. It is not based on real time. We will see the architecture of RTGS, then you will be able to appreciate this difference completely. Then the second factor is gross settlement. Whereas NEFT is a net settlement, this is a gross settlement. So what is great about gross settlement? Why should we have a separate product for gross settlement? Why great? What's great? Why should you have a gross settlement product? This is a very, very important question, and we should understand a little bit of banking history to answer this question. There was one bank called Herstatt Bank. In Germany, Frankfurt. On 26th June 1974, this bank purchased American dollars from American banks operating in Germany, in Frankfurt. At around 2 p.m., approximately 2 p.m. What this Herstatt Bank did? It purchased, it took Deutsche Mark in Frankfurt from American banks. American banks paid Herstatt Bank Deutsche Mark in Frankfurt at 2 o'clock. And you know, there is a time difference between Frankfurt and New York. The time difference is 6 hours. If it is 2 p.m. in Frankfurt, it is 8 a.m. in New York. So what happened? The American banks paid something around $600 million to this bank around 2 p.m. And when the payment was made, New York had not opened for business, because it was not 10 a.m. It will take another 2 hours to open. So on the opening of the New York banks, Herstatt Bank is supposed to pay American dollar to the American banks in New York. But before this could happen, before the Herstatt Bank could pay the American banks dollar in New York, the Central Bank of Germany, called Bundesbank, liquidated this bank. Bundesbank, which is the central bank of Germany, they liquidated this bank and stopped all payment, outgoes from. Once a bank is liquidated, they will put moratorium. They will say no outflow from that moment onwards. Therefore, before this bank could make payment of American dollar in New York at 10 o'clock, this bank was liquidated and a moratorium was imposed. So, the American banks could not get dollars, something around $600 million was involved. This became a very big issue. And this risk is called settlement risk in banking. In interbank dealings, when one bank delivers securities, another bank makes payment. And if you are going to wait for clearing that amount, you are running a settlement risk on that bank. Now, the role of RTGS is removing the settlement risk among banks. The most important functionality of RTGS is that. Now, closer home, this is all happened in 1974 in Germany. Now let us come to India. What happened in India? In 2001, there was a stock market scam. In India we have had two stock market scams. One is by Harshad Mehta in 1991-92, and then after 9 years he had a disciple called Ketan Parekh. That Ketan Parekh had another, it was another scam in 2001-2002, something around 6,000 to 9,000 crores in those days. Now we are not interested in the scam. We are interested in this portion relating to RTGS. What is RTGS? Now in that Ketan Parekh scam, this Ketan Parekh, who was a chartered accountant, he was playing the market. He was getting some money and buying securities and inflating the market. There was one share called Sonata Software, which was selling for 90 rupees, and it was taken by Ketan Parekh to 2,150. He was actually inflating the prices of stocks. Now, as a part of this, this Ketan Parekh orchestrated a deal. In this deal, there was one bank called Madhavpura Mercantile Cooperative Bank. Madhavpura Mercantile Cooperative Bank. And this bank issued pay orders for 250 crores approximately. Madhavpura Mercantile Cooperative Bank, which issued pay orders of for 250. What is a pay order? Pay order is a check issued by a bank on itself. And these pay orders were delivered to Bank of India in 2001. This happened in 2001. Bank of India at 10 a.m. and securities worth 250 crores were released. Now in those days in Bombay we had two clearing. One is called customer clearing and the other is called banker clearing. Customer clearing will be happening at 2 o'clock, bankers clearing will be happening at 4:30. Now, Bank of India, what they used to do, suppose there is a deal between two banks, let us say Punjab National Bank and Bank of Baroda. Punjab National Bank will take securities, Bank of Baroda will give its pay order for 200 crores or 300 crores. This pay orders will be settled at 4:30 when the interbank clearing happens. Bankers clearing happens at 4:30 p.m. So Bank of India was keeping the pay order to be released at 4:30 p.m. Then at 11 o'clock, Reserve Bank of India brought moratorium on this Madhavpura Mercantile Cooperative Bank and stopped all further payments. Therefore, at 4:30 p.m., when the pay orders were brought into interbank clearing by Bank of India, it was returned because all operations were stopped by Reserve Bank of India. As a result, Reserve Bank of India got into a huge problem of realizing 250 crores. This was because there was no RTGS at that point of time. Today, if the same scenario, if the same transaction is going to happen, how it will happen? At 10 o'clock, this Madhavpura Mercantile Cooperative Bank, if it is a member of the RTGS, it will pay 250 crores. and 10:01 the securities will be delivered. There is no netting of settlements between banks. How transactions happen now today? Let us assume two banks, Canara Bank and Punjab National Bank. PNB. Transaction 1, Canara Bank purchases securities from Punjab National Bank for 200 crores. Therefore, Canara Bank will issue a check for 200 crores at 10:01 a.m. Second, at 10:05 a.m., 5 a.m., Punjab National Bank issues a check to Canara Bank for 300 crores for some interbank dealings. Earlier, we used to wait up to like these transactions will go on up to 4:30, and at 4:30 all this will be cleared. Finally, suppose it is 1,000, Canara Bank has to give to Punjab National Bank 1,000 crore and Punjab National Bank has to give 800 crores to Canara Bank. This 200 crores will be net settled at 4:30 p.m. This was the earlier system. If in the meanwhile any one of the bank fails, the other bank is suffering from settlement risk. So to avoid this, now how it functions under real-time RTGS today? At 10:01, Canara Bank has to issue 200 crores to Punjab National Bank. You send one settlement. Immediately one send RTGS. 200 crores money will be remitted at 10:01 to Punjab National Bank. And Punjab National Bank will deliver the securities. At 10:05, another transaction for 300 crores happens. In this, Punjab National Bank issues a check in favor of Canara Bank. At 10:05, Punjab National Bank will issue another RTGS remittance. So each remittance will happen. There is no netting. That is why it is called gross. It is called real time because the moment the sending branch presses the button, within 2 seconds, 2 to 5 seconds, the money will be credited to the account, destination branch account. Because of the beautiful architecture, we will see the architecture of RTGS. And it is gross. The beauty of it lies because it is gross. There is no netting of settlement and waiting till 4:30 p.m. And then a difference of 200 crores will be paid in this case Canara Bank to Punjab National Bank. That will not happen. For every transaction, you take securities from me, you pay me money, take. After 5 minutes, I buy securities from you, I will pay you and take securities. Therefore, it happens transaction by transaction. Because all transactions are of high value. Because it happens transaction by transaction, there is no settlement risk involved. You don't wait until 4:30 in the evening and take a settlement risk on the other counterparty. So RTGS is a wonderful mechanism brought in by Reserve Bank of India to eradicate completely the settlement risk that arises between banks. And that's a very beautiful mechanism because large sums are involved. In the case of Madhapura Cooperative Bank, 250 crores, it was a small cooperative bank. And Bank of India had to suffer. They did no wrong. They were following the practice that was prevalent in those days. But they suffered a huge risk because 250 crores at 4:30 p.m. there was a moratorium and they could not realize a single pay out of that pay orders. The pay order became zero value at 11 o'clock when Reserve Bank of India brought moratorium. So this is why the real-time gross settlement system is a very great boon to not only bankers but also for large corporates where the large sums are involved transaction by transaction. It is real time because it happens in 2 to 3 seconds, whereas in NEFT it takes about more than 2 hours to get the money. And this is gross. Each transaction is settled transaction by transaction. There is no waiting till 4:30 p.m. which totally eradicates settlement risk of banks.